Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Thursday the 7th, and we had the market moving lower here today. We also had exports out this morning, but before we get into that, let's turn over to the grain hedge trading platform and see where we closed off the day. Corn trading down 5 3/4 cents, soybeans down 7.5 cents, wheat in Chicago here trading down 6.5 cents on the day. Let's turn over to a chart here. This is a daily corn chart. Just want to touch on this resistance level that we talked a little about yesterday. You'll notice one of the things I did here is just drew a trend line from the lows in February to the lows in March. And you'll notice that that extends to the right part of this chart. You'll notice last couple of days, basically yesterday and today, we touched on that resistance level, and it provided a significant amount of resistance. We ended up seeing a good amount of selling pressure both yesterday when we touched on it and continuation in selling here today. So that's something that we talked a little bit about yesterday. It was a price level we wanted to pay close attention to, and it proved today to be a very relevant price level, something that we should be paying attention to here in the future. Guys, let's talk a little bit about export sales here. This morning we had very positive export sales for corn, booking 841,000 metric tons. That's over last week's, which we saw 832,000 metric tons booked last week. So we do see a continued increase here in export sales. This beat expectations as well, which range between 300 to 600,000 metric tons. All in all, very good week for corn. When you look at soybeans here, we had export sales of 338,000 metric tons. Typically, during this time of the year, we would not expect to see these kinds of sales continuing. Last week, we had 433,000 metric tons. This week, 338. This beats analyst expectations. All in all, this is very positive here for soybeans, and it moves us even further ahead of pace to meet USDA expectations. We'll take a closer look at that here in just a moment. Wheat sales came in. They missed analyst expectations. We saw more cancellations this week, 148,000 metric tons. That was actually it was on the low side of analyst expectations here. Analysts were expecting anywhere between cancellations of 100 to actual sales of 100. So this was a little bit disappointing, especially coming on the fact that last week we saw cancellations of 449,000 metric tons. So not very good week here for wheat in general. Let's take a look now at where corn, soybeans, and wheat are in terms of meeting USDA expectations. You'll notice these charts here, they show last week, which is the blue line here, or excuse me, last year, which is the blue line. The green line is the pace needed, taking into account seasonality, to meet USDA expectations. And then the red lines in these bars really represent cumulative export sales for this particular week. So you'll notice our cumulative export sales are well ahead of pace. They're ahead of where we would expect to need to be, taking into account seasonality, but we are a little bit behind last year's pace. All in all, we have 41.2 million metric tons booked. We would expect to need somewhere around 39.3 to meet USDA expectations. So we are still running ahead of pace there. Good and positive for corn. When you take a look at soybeans, this is a slightly different scenario. You'll notice we're not only ahead of pace to meet USDA expectations, but we're also ahead of last year's pace. We've booked 49.4 million metric tons at this point during the year. We would expect to need somewhere around 46.1 million metric tons. All in all, very positive here for soybeans, and I would expect perhaps even in the next USDA report here on Tuesday, the supply and demand report, that we may have to actually see a little bit of a revision there in export sales. We'll see if that is in fact the case, but these kind of sales that we've got over the last few weeks are not typical for this time of the year, and it does move us a little bit further ahead. I wouldn't be surprised to see some updates there in export sales for soybeans. When you look at wheat, cumulative export commitments here, around 23.1 million metric tons. Last week we crossed over that green line, which represents the pace needed to meet USDA expectations. This week we kind of slid even further here. So we now have 23.1 million metric tons cumulative export sales, and we're expected to need somewhere around 23.7. So we're about 0.6 million metric tons behind pace now. That makes me a little bit concerned. We may see some reflection there in the supply and demand report here on Tuesday. We'll just have to see. Now, in terms of wheat, Wheat had the Kansas City Wheat Tour was going on this week. This is the third day. The Wheat Council here met in Kansas City. They announced that their yield forecast for Kansas is 35.9 bushels per acre. This is behind the 40.3 bushels per acre that we've seen in the 5-year moving average. So this year's crop definitely has been affected by drought. It's been affected by frost freeze situations there, and it's also being affected by disease. And it is a little bit disappointing coming in on the lower side of what analysts were expecting. Production here is expected to be somewhere around 288.5 million bushels. That's behind the 5-year average here, which was around 313.6 million bushels. I think some traders were thinking somewhere around 300 million bushels is where the wheat tour would come in. So we're on the shy side of that, and we very easily could see a bit of a pop here in the overnight, possibly continuing to hold those gains here going into the morning pause. We'll have to see how that all plays out here on Friday. Guys, thanks a lot for tuning in. If you have any questions about what we talked about today, please give the office a call. The number is 877-472-4607. Remember, if you haven't done so already, take a demo of that mobile trading platform. It is a powerful tool. View live quotes in the cab of your tractor, be able to capture those opportunities that the market presents, especially when we get a little bit of volatility. This is a great marketing tool for 2015. Thanks a lot for tuning in. We'll see you here Friday for the weekly wrap-up.